Hello everyone, welcome back to my YouTube channel where we talk about stocks, dividends, anything like that, equities, bonds, anything financial. You're in the right place. So please subscribe to this video before we get started. Make sure you like the video, it really helps me out. I'm trying to hit 100 subscribers, I'm only 9 subscribers off now. So if you could like it and subscribe, that would be so fantastic. Right, so today I want to talk about how I just got paid my first dividend of this tax year. So this is my Hargreaves Lansdown account. This is my stocks and shares ISA. I have this is my last tax year's ISA. I have a new one with free trade, which you can see in. I'll put a link in the top corner for you. You can see that I just made a video on my plans for investing this year. I also have a lifetime ISA with Hargreaves Lansdown. So if we get into it, I'll show you my income history. So here we go. As you can see here, I've just been paid. My most recent one was from the Royal Bank of Scotland for £47.41, sorry. That was today. And I also got two payments from Eden Tree Higher Income Fund Class B. The income, obviously not accumulation, because accumulation goes back into growing the fund. So I have two payments here, and that's because I've invested twice. So I've been growing my investment. I did pull out of that, and then I went back into that one. So that's why you have two on there. And I've also been paid this Vanguard Funds S&P 500 dividend. That was on the 11th of April. That is an overseas dividend payment. That was obviously a small one, because you can see here I only have about £85 in my S&P 500 fund, so that would make sense. I am planning to put more into that, but obviously not in this account. It will be in the free trade ISA now from now on for this tax year anyway. I also have these down here, but as you can see, these are loyalty, so it's not very much money. It's only like 42p, 11p. So these are the loyalty bonuses I get here. So £1.94 in total I've got from loyalty in history, and these are my last 90 days. This is my last 90 days of income, and this is my last 90 days of all combined. So I'm quite happy with this. This is the first dividend Royal Bank of Scotland have paid since the financial crisis. Well, a final dividend. They paid an interim one earlier this year, at the end of last year, but this is the one that they're paying for the first time, a final dividend. This includes a special dividend of 7p as well per share, which is pretty good. So I think current prices, Royal Bank of Scotland's dividend yield is around, it says 2.3%, but I don't believe that's taking into account the final dividend. If I'm correct in saying that, I'm not sure if I am, but when I worked out my own personal yield, because obviously I've invested £1,000, as you can see here, I put £998 in, and I got a £47 dividend back from that. So in my case, my dividend yield is around 4.8%. So I'm quite happy with that. So what should you do with your dividend now? So I have mine set up to come back to my account and be held as cash, and then I can either reinvest it myself or in the same asset, or I can buy a different asset with it. Or I'd never plan to take my dividend out of my investment account at all. You should always reinvest dividends. However, sometimes it could be better maybe to reinvest it somewhere elsewhere. If you did feel that way, you want to do that, that is acceptable, and I think I might do that this time, because as happy as I am with Royal Bank of Scotland, there might be better opportunities out there, and to diversify a little bit. And also, I don't know, if you were going to reinvest, a dividend reinvestment program can be better than putting it straight into your account, because obviously if I reinvest now, I've got to pay fees again on purchasing the stock, whereas it would still have to pay fees if I had a drip, but usually it's much lower through like Hargreaves Lansdown have a discount system where you pay less if you are reinvesting a dividend straight away. The same if you're paying monthly into your stocks, you pay a lot less to buy the share monthly than you would if you were going to buy it yourself every month. So sometimes it is better to have it fully set up. So now if we have a look at what would happen if you did reinvest your dividends as opposed to taking out your dividends. So here we have the S&P 500. It is the total price. So the blue line is reinvesting dividends, the gold line is paying out dividends, and it runs from 1960 all the way up to 2017. So this is huge, and this is $10,000 in 1960, which is a lot more money back in 1960 than it is now. Obviously inflation's taken a massive toll on that. That £10,000 is worth a lot more in 1960 than it is today. But even if we disregard that completely, so you put in £10,000 in December of 1960, by December of 2017 it's $460,095, and that's massive. That's huge. That is unbelievable growth. That's 46 times what you put in 1960, and it's been a long time. It's like committed. You have to be committed to get that growth. So that's good, but you've got a lot of money out of that. That's a good return on investment. But if you look at the dividends reinvested, 2.5 million instead of 460,000, 5 times more money for reinvesting dividends. So you see here why it is so important not to take money out of your broker's account, and if you aren't going to reinvest it in the same asset, at least invest it somewhere else to let it grow. Which is why when I get paid my dividends and I can afford to live without taking money out of my dividends, whereas if I relied on my dividends, that's a different story. I might have to take a little bit out. Hopefully I'd be investing a little bit of them again, but currently I don't need any of the dividends to live. So for that reason, I'm going to be putting all of my money into growing this and compounding, because compounding is what really makes the money on this. And as you can see here, it's a huge difference, huge difference. So I want to have a look now quickly at Royal Bank of Scotland's investor page. So here we go, this is what I was talking about. We have a final dividend of 3.5 pence per share and a special dividend of 7.5 pence a share, so that obviously is 11p per share. That's great. And we also have obviously the interim one, which was 2p back in, it says of the 12th of October that was paid. So I just wanted to show you a company's actual dividend page. So anyway, now we've seen my dividend that just got paid for the end of today. We've looked at dividend reinvestment versus taking payouts, and we've had a look at a company's dividend investor relations page. I want to just say thank you for watching. I hope you've already subscribed. If you haven't, make sure you subscribe now, and if you could push the bell icon, that really helps me out, because it makes sure that YouTube shows you every single video that I post. If you feel like liking it, like the video. Comment down below any stocks you want analysed. I have one coming up, or a request for a reviewer, so thank you very much for that. You know who you were. So thank you very much for watching. Make sure you subscribe to the channel, and I'll hope to see you in the next one.